Good morning and welcome to Storm Stock Solutions. I'm Grant Mercer, and we're getting you set up before the opening bell on this holiday-shortened week, where the big question is simple. Do we still have a Santa Claus rally in the tank? Let's start with the tone. According to reporting from MarketWatch, U.S. stock futures are in the green this morning, and we've got gold and silver pushing up to record levels. That's an interesting combination. Risk assets looking for a year-end bounce, while classic safe havens are also bid. It tells you there's optimism out there, but it's cautious, with investors trying to grab some upside without ignoring the macro uncertainty that's been hanging over December. This is the start of that traditional Santa Claus rally window, and multiple pieces overnight are leaning into that idea. MarketWatch highlighted that, despite a rough start to December, traders haven't given up on the seasonal pattern where stocks often grind higher into the last few trading days of the year. Historically, that move has been as much about positioning and lighter holiday volume as it is about fundamentals. So today, professionals are likely watching whether early strength in futures actually sticks once cash trading opens, or if sellers use any pop as a chance to take profits into year-end. On the opportunity side, the clearest area of strength is sentiment itself. Futures are up, and the conversation is about a Christmas rally rather than a Christmas correction. When you layer that on top of record prices in gold and silver, it puts a spotlight on two themes. First, equity traders are watching large caps and tech to see if they can reassert leadership, especially those names that got hit in early December and may benefit from a bit of bargain hunting or performance chasing. Second, commodities desks are zeroed in on the metals complex. New highs in gold and silver often reflect worries about rates, currencies, or geopolitics, but they can also attract momentum traders who simply see the breakout and follow price. For short-term traders, this kind of backdrop tends to create pockets of activity in index futures, liquid mega caps, and anything linked to precious metals, miners, ETFs, and related plays. Again, that's not a call to jump in. It's where the market's attention is likely to be focused out of the gate. Now, even though we don't have a specific list of weak spots in the headlines this morning, there are still areas to handle with care. A holiday week can exaggerate moves in both directions because volumes thin out. That means any disappointment, whether it's a data surprise, an earnings pre-announcement, or just a reversal in sentiment, can hit sectors that have been stretched. Names that rallied hard into December without much support from earnings or cash flow tend to be the first ones professionals scrutinize when the tape gets choppy. So the risk today isn't one single story. It's the combination of elevated hopes for a rally and a market structure that can move quickly when everyone is half watching from their holiday plans. Let's turn to some of the quieter, under-the-radar themes that are showing up in the overnight feeds, because they tell you what's on real households' minds as we head into year-end. MarketWatch has a series of personal finance stories trending. One couple in their 70s worried about homelessness with only about $100,000 saved. Another family wrestling with how to split an estate between children from different marriages, and others asking if they can retire in their 60s with seven-figure IRA balances or 401ks. I treat these as important background signals, not stock picks. They highlight that investors, especially near or in retirement, are laser-focused on income security, sequence of returns, risk, and taxes. There's also a prominent piece on year-end tax moves that could lower tax bills and potentially boost refunds. Professionals know that when tax season and portfolio positioning intersect, you often see tax loss harvesting, rebalancing out of concentrated stock positions, and decisions around required minimum distributions. Those are the kinds of flows that can subtly impact trading in certain names and sectors into the final days of the year. So in the background, I'm watching themes like retirement income products, financial planning and advisory businesses, and anything tied to older homeowners and housings. There's even a piece about costly mistakes people over 65 make when selling their homes. None of this is a direct market call, but it paints a picture of where household balance sheet stress and decision-making might influence longer-term demand for financial services and real estate. As we head toward the open, the key question for today is whether that early futures strength translates into a broad-based move, or if this turns into more of a quiet, selective tape with metals leadership and stock indexes just grinding. Traders will be watching intraday breadth, volume behind any rallies, and whether gold and silver keep punching higher or fade off those records. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady.